going to be a quiet week for economic data, which is lucky really, because there's a huge amount of news due on the corporate front. The second quarter earnings reporting season in America will be in full swing, with 183 of the S&P 500 index's members scheduled to update shareholders on their financial performance. Big names to watch include Google's parent Alphabet, President Trump's latest punchbag Harley-Davidson, as well as Boeing, Coca-Cola, Ford, Amazon.com, Intel and ExxonMobil, to name but a few. And some good results may be needed to help stoke momentum in America's S&P 500 index. For all the optimism over the Trump tax cuts, the US economy, and its leading tech firms in particular, the S&P 500 has made pretty modest gains so far this year, if any at all, and it's making pretty heavy weather of breaking above the January highs. Now, it's going to be busy on this side of the pond as well. Nearly a fifth of the FTSE 100's members are due to publish results or a trading statement, and a good few FTSE 250 firms will be doing the same for good measure. They include, on Tuesday the 24th of July, real estate investment trust Hammerson will be in the spotlight after two failed deals, the arrival of an activist investor, and further concerns over the fate of bricks and mortar retail sites. Croda, GlaxoSmithKline, Informa and Vodafone will be making headlines on the 25th. On the 26th, we've got Anglo American, AstraZeneca, British American Tobacco, Royal Dutch Shell and Smith & Nephew. And finally, on Friday the 27th of July, BT, Pearson and Reckitt Benckiser will close out what should be an informative week. But for all of that lot, I still suspect the company most capable of causing a fuss in the week ahead will be terrestrial broadcaster ITV when it unveils its first half results on Wednesday the 25th of July. Investors seem to switch off after February's full year results, the first batch under new Chief Executive Dame Caroline McCall, as they took exception to the absence of a special dividend for the first time since 2011, the appearance of further exceptional costs and an increase in the programming budget. However, the shares have rallied since for three possible reasons. May's first quarter trading update was more encouraging. The big battle for Sky between the Murdoch's 21st Century Fox vehicle and Comcast has prompted some analysts to stress the strategic value of ITV within the UK broadcast business and loudly ponder whether John Malone's Liberty Global operation will use its 10% stake in ITV to launch a full bid. And also, the Football World Cup in Russia has prompted some optimism about ITV's viewing and advertising figures. This all makes the timing of the first half numbers particularly interesting, and watch out for 3 points in particular. First, ITV has forecast a 2% increase in advertising in the first 6 months of the year, compared to a 1% advance in the first quarter alone. Total revenues rose 5% in Q1, with non-advertising up 12%, to reaffirm the value of ITV's strategy to create and sell more programming content. Second, pre-tax profits were £381 million in the first half a year ago. Management's already flagged that increase in programming investment and sports rights from £1.025 billion to £1.06 billion this year, which will weigh on near-term profits, and analysts are looking for around a 3% drop in full-year pre-tax income on an adjusted basis. And thirdly, look at the dividend. This came in at 2.52 pence a share in the first half a year ago. For the full year, analysts are looking for a 5% increase, so let's see how the interim payment does and whether indeed ITV makes any mention of future special payments. As a final point, Dame Caroline is due to unveil the details of what she's called her strategic refresh of the company. The name implies that radical changes are unlikely, but possible themes do include programming and technological investment. Thank you for watching, and I look forward to seeing you next time.